Hello from Trend Signal for a review of the data and events of the week beginning the 8th of May. Overnight news is all about the French presidential election, an overwhelming vote in favour of Macron and his party En Marche. Not much of a party at the moment, soon will have to be though. Very much predicted by the polls, I guess even more convincing than some polls had even forecast. I think the eventual outcome, I believe, is going to be near 66% for Macron. So Le Pen didn't attract the sort of support she was expected to get. Stock markets and the euro reacted curiously. I guess it's perhaps naive of me to think that the markets aren't so naive, but the euro popped up, as indeed equities did, but since the initial reaction, mid-Monday morning, as we're talking now, the markets have definitely pulled back, which is something I would have expected. So we're seeing the euro pull back and equities as well. This is just a chart of the euro, so having touched sort of 109, 110 virtually early morning, we're now trading around 109.40 odd. Where it will end the day, I don't know, but certainly I'm not surprised to see it pull back the way it has done. There is a public holiday actually in France today, curiously, Victory Day. Well, I'm not sure what victory that refers to. But anyway, it's a bank holiday in France, but I think the stock market has opened and that has shed some ground as well, the CAC 40. A review of last week's markets. Equities were steadier. The US put in another strong performance, really courtesy of a pretty good non-farm payroll number last Friday, pushing markets to a record close again. Although I don't think they're going to gap up again this morning with the way things are looking. That's Monday morning. But the Dow, S&P both put on 0.3%, 0.6% respectively. But it was the DAX that was the big mover last week, up 278 points ahead of the expected outcome of the French presidential election on Sunday, up 2.24%. The Nikkei also joined the party, up 248 points, 1.3% on the back of a weaker yen. On the currency markets, the euro, that was quite steady, up a full cent against the dollar, which is just under 1%. Sterling sort of treading water as we enter the end of the first official week of electioneering for the general election on June 8th. So sterling was up just 0.25%, I should say. Dollar yen, we just mentioned that really, but up 118 points, just over 1% there. So I think that's the dollar strengthening against the yen, encouraging the Japanese exporters within the Nikkei 225. The big moves, though, were on commodities. Gold down $39. That's what, 3%. Oil, UK oil down 2.5%. WTI, sorry, UK oil down $2.5. That's 5%. In percentage moves. US oil down $2.86, that's close on 6%. The slump in gold, pretty much reacting to events really. The global sort of geopolitical risk or heat has subsided somewhat since the Syrian Tomahawk cruise missile event. And North Korea, although Kim Jong-un has decided to start imprisoning US nationals, quite what they're doing in North Korea, God knows. But anyway, that may ratchet the heat up again a little bit. But certainly, positive non-farm payroll number on Friday has maintained a strong probability of a rate hike next month by the Federal Reserve. If we look at the CME Group's probability for the month meeting, the FOMC meeting next month on the 14th of June, 87.7%. So that's pretty much a shoe-in for a rate rise up to 100 to 125 basis point target range there. So, and of course, something like gold, which has a cost to owning the stuff. It doesn't pay any returns, so it's just the cost to owning it, the cost of the money that's required to buy it. So higher rates puts the cost of owning it higher, and hence it's not very good news for it. There we go. Slump in oil. Well, I guess we've talked about it a lot. The markets have talked about it a lot. I think there are concerns mounting about OPEC. Are they really cutting that much? Some of the reports I've seen suggest that OPEC actually produced more in March than they did in February. They can't trust each other, which is something that's been a long-standing problem. The US oil stocks are stubbornly high, remain so, and I think shale oil, well, the US typically has always been referred to as a swing consumer, but shale oil is almost that swing producer now, with the production cuts that OPEC and non-OPEC members have said they are going to hit, which they're not doing, is being offset by the increase in production from the shale oil belt in the US. So not particularly good news, and certainly the FT reports that the bets placed on the oil market have subsided to pre-OPEC production cut time. So a lot of the hedge funds bailing out of those positions in some measure. Of course, we have got OPEC meeting again at the end of May 25th in Vienna, I believe, where they hope to agree to extend production cuts until the end of the year. That's fine if they're sticking to them, which is not that clear, obviously. It isn't just oil, gold that have been falling as well. Other metal prices, base metals have been falling quite sharply. Copper is at the year's low. Read reports about iron ore slumping. It certainly has fallen quite sharply over the last 2 months, and last week that fall accelerated with a 15% fall in iron ore. I hear connected to a slowdown in purchases from China. And soft commodities as well, coffee, cocoa, sugar, all feeling the heat as the commodity sector in general continues to turn down. Okay, let's have a quick look at the data and events this week. Not a lot out really. We have to wait until Wednesday before we have the ECB President Mario Draghi speaking at the Dutch Parliament, or the Dutch House of Representatives, I should say, about the impact of monetary policy. Always bound to create some sort of waves in the market, so that'll be one to watch. 3:30, we have the weekly crude oil inventories from the EIA in the US. Obviously, that'll attract the usual interest, of course, and bearing in mind where the price of oil is at the moment. And then Thursday, the big day for the UK markets, we've got manufacturing production first thing in the morning at 9:30, and then we have the three-pronged attack from the Bank of England, the inflation report, the monetary policy vote, and also the minutes from the monetary policy. So we should be a lot clearer on what the thinking is there, but we're expecting very little, as it turns out. But it's always interesting to see, to read those minutes. Then we have producer price index. That's really the cost of goods and services going into production, and that's in the US, and that's ahead of the consumer price index reading, the core CPI, still very benign, plus 0.2%. As the non-farm payroll data reported last week, there was very little sign of any wage inflation, which could then lead to a general bout of inflation. So seems all is fine. Otherwise, G7 meeting starting in Italy on Friday, finishing Saturday, the 13th. A lot more focused and useful than the G20, which is really very much of a talking shop. But the G7, we can get interesting news and decisions made from that. So it's possible we could hear about some of the geopolitical issues on Friday. That's it. Thank you very much for listening. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.